Hello, friends. So today in this session, we are going to discuss a critical issue that is affecting India's financial sector. So that's about the rising stress in the microfinance institutions, the MFIs. Okay. So what the Reserve Bank of India, RBI, had feared, the defaults in small, loans, which are creating a chain reaction, has now become a reality. We discussed about this, I think, in the last week's session also. So this situation demands our attention as it impacts not just the financial institution, but also the economically weaker sections of society. So let's understand the causes, the consequences, and the measures which are being taken to address this crisis. So let's first understand the microfinance. What is microfinance and its role? So to start with, what are microfinance loans? Guys, unlike traditional loans, such as, we talk about home loans or car loans, microfinance loans are collateral free credit, which are extended by banks and non banking financial companies, NBFCs, to low income household. Now, these loans typically cater to individuals with an annual income which is less than 3 lakh. So, the aim is to support those without substantial assets, providing them an opportunity to meet their financial needs. But this very structure has actually led to vulnerabilities, and especially when borrowers fail to repay. So, again, the interest is also high, which we will be discussing again. So, if you see the alarming rise in defaults at this point of time, if you look at the recent data that reveals a worrying trend in the microfinance sector. So, the proportion of doubtful loans, which means the loans unlikely to be repaid, has surged to 11.6%, making an 18-month high. So, this means a significant portion of the money lent by MSIs is at risk of being written off now. So, additionally, NPAs, the non-performing assets or the bad loans, have also increased by 1.4% in just the last 3 months. So, for instance, the private sector lender IndusInd Bank reported 20% dip in profit due to rising, microfinance related NPAs. If you look at the sector-wise NPA breakdown, see the stress is not uniform across institutions. Private banks report NPAs in microfinance loans at around 12.1%, while small finance banks, if SFBs, have the highest, they reported NPAs at around 15.3%. So NBFCs dealing exclusively with microfinance are also severely affected, with bad loans, climbing to 8.55%. And most importantly, not for profit MFIs, they face an alarming 37.4% NPA rate. So, this trend highlights a growing crisis, especially at the bottom of the economic pyramid. Now, the question is, what led to this crisis? So, see, several factors. If you look at the economic disruptions, especially rural areas, which are primary beneficiaries of microfinance loans, have faced significant economic challenges. Events like reduced agricultural growth from 4% to 1.8% have directly impacted, borrowers' repayment capacity. Secondly, if you look at RBI's deregulation in 2022, in 2022, RBI deregulated the microfinance sector and allowing the lenders to set their own terms, including the interest rate. So, this actually aimed to promote market driven practices. It led to exorbitant interest rates. Sometimes it went even as high as 25%. So, such rate made it nearly impossible for borrowers to repay, and that is again leading to spike in defaults. So, when they try to borrow, they are willing to pay that interest rate, but eventually they fail to pay that interest rate. So that's how the repayment capacity won't be there when you need to pay such kind of exorbitant interest, and eventually that lead to defaults. Now let's look at corrective measures of RBI. See, realizing the gravity of the situation, RBI have recently taken steps to curb further damage. So it imposed restrictions on 4 NBFCs, including, Ashirvad Microfinance and Navi Finance, preventing them from sanctioning new loans. So these measures aim to limit further risk and stabilize the sector. But many argue that RBI's initial regulation was a key misstep, as it underestimated the sector's ability to self-regulate. So that was something which should not have been done. Now, another contributing factor was El Nino effect, which again disrupted agricultural income. Just before I've mentioned that it dropped from 4 to 1.8%. So again, as farming remained the primary livelihood in rural area, reduced agricultural growth compelled many households to take loans for their daily survival. But with no steady income, repaying these loans became a Herculean task for them. And again, that is compounding to the financial stress. So first of all, there is no income. Secondly, the interest is very high. So it again led them to default on the loans. Now, if you look at the lessons learned or the bigger picture, see the microfinance sector faced severe challenges. Larger loans and such as home and business loans have shown improvement. That is something which we have seen. Microfinance is struggling, but these loans have seen improvements, and NPAs in these segments have actually declined, which is again a positive sign. And there is a significant reduction from the double digit level a few years ago. It was in double digit, but that have been significantly reduced. So this contrast highlight the unique vulnerabilities of microfinance and the need for stricter oversight and sustainable practices in this segment. Maybe the 2022 deregulation could have created all these issues. So the microfinance crisis actually underscores the importance of balancing financial inclusion with responsible lending. So financial inclusion is required. That doesn't mean that you will lend for anyone, by charging any rate. You cannot have such kind of completely deregulated setup. See, the sector plays a crucial role in empowering low-income household, no doubt. But unchecked practices like what we discussed can lead to systemic stress, and it can affect the entire economic situation. So the RBI and the government must collaborate to ensure fair practices, regulate the interest rates again, and better risk management to prevent such crises in future. So that's all about this session, guys, and I hope you understood something related to this. What are your thoughts? You can comment below. In case if you're looking for any mentorship program, you can get the link in the description. See the details over there. So see you guys in the next video. Thank you so much.